Good morning, everyone, and welcome to the Modern Market, where every day we discuss everything to do with the modern market. That is the crypto market, the NFT market, and how to make some or a lot of money on the internet. And loaded up for discussion today, we have three pretty interesting news, I think. First news, BlackRock is looking to tokenize shares of its $150 billion treasury trust fund, as a current SEC filing is showing. We also have some BlackRock adjacent discussion on Bitcoin as an asset per se. As a second piece of news, a heated debate in the Bitcoin community where basically the devs are split over a key proposal when it comes to data storage. And last but not least, Telegram and the Ton Foundation are going strong into DeFi with a $500 million on-chain fund, which has the aim to bring corporate debt on-chain. That's pretty interesting in the way it works, and I'm quite curious to elaborate on that a bit further. We've also got the latest on price action on crypto NFTs and a discussion on the general understanding or BlackRock's understanding as well of Bitcoin as an asset class. So stay tuned for that. But before we do that, just as a reminder, nothing that we say here is financial advice, and this market is very risky. So we do not know anything for sure. So please do proceed with caution and exercise your own judgment. And Brett, on the second of me finishing this intro, is joining me on video and is preventing me from being totally lonely up here. Brett, awesome timing. Welcome to the show. How are you doing, my man?
Almost had you going solo. Yeah, I woke up and fell back asleep. How you been?
Good. Still a token. Actually, the second full day for me a token. Yesterday was a bit of a slower start, apart from our own event, which we did pretty early on in the morning. Not early for you. We did it at 8:30. We talked about that on the show yesterday. But apparently for the locals, way too early to do an event. So it was more of a test of loyalty to see who is willing to wake up for us and show up for us at the event. But you would be the winner of this competition, given that you wake up at this insane time 3 times a week to be with us on the show.
Was it hot? That's what I care about. I heard it's actually not too bad.
I like it. It's 42 degrees. I walked a bit, even in the midday heat. People look at me as if I'm crazy. Everyone's complaining about the weather. I'm like, it's not too bad, guys. But maybe that's me just being reminiscent of my time living in Austin and actually quite enjoying the summer weather there. But I'm pretty sure once it gets to July, August, and you go into the 50s, what is it, like 115, 20-ish Fahrenheit, or maybe more than 120 Fahrenheit, I don't know, the freedom units above 50 degrees too well, to be honest, then I think it's getting pretty crazy.
Yeah, I see Funky with his hand up. I bet he's going to get in here with this Florida heat conversation.
Yeah, I think.
Funky, are you surviving?
GM gang, yeah, hopefully you can hear me okay. I'm in a pretty loud hotel, but yeah, I was going to say, I normally can tolerate it pretty well, but it was 102, and after being outside for about 30, 40 minutes, I was starting to sweat, so it is pretty hot out there, especially with the sun beating down on you.
But I think you're handling that pretty well. Anyhow, with the weather discussion out of the way, let's get into it. We have a pretty dense show, and starting as usual with the price action. Let me get it up on screen. There we go. Pretty flat day in general. BTC is essentially flat and still at 95K as it was yesterday. ETH is down 1%, but still above 1.8K at $1,810. BNB down a touchdown 0.3% at 601. Solana down 0.8% at $147. In terms of the meme side of things, we are basically down over the last 24 hours on quite a few coins, but not too bad, and still up massively over the last 7 days for a majority of them. So Dogecoin is down 1.7%. Pepe is flat. Trump is down 5%. Pudgy Penguins is down 10%. However, Pengu token is still up 54% over the week. Dogwave Hat is up 2.5%, up 8% over the week. We've also seen a bit of a correction on the AI side of things. AI16Z is down 9%. However, once again, up 43% over the week. MOG is one of the exceptions. And MOG is down as well. It's down 3%. Melania is down 5%. So basically a bit of a correction on the meme side of things. But for most memes, however, we are still very, very healthily in the green over the last 7 days. Getting into the main headlines, as I said before, BlackRock is looking to tokenize shares of its $150 billion treasury trust fund. That is pretty interesting because the intention here, and I'm going to get into that a bit later, is not to bring crypto on chain, but to really focus on the proof of ownership. Then the debate in the Bitcoin dev community when it comes to data storage. Brett will cover that piece of news for us. And last but not least, Telegram going DeFi with this $500 million fund with the intention to bring corporate debt on chain. I'm going to cover that towards the end of the show. Moving on to the NFT side of things, basically we still see a continuation of the picture from yesterday. Pudgy Penguins are still up healthily 10% over the last week, but are down a couple of percent over the last 24 hours at 11.35 ETH floor. The Genesis pump that I mentioned yesterday, that is the official OpenSea collection, the gems, up another 10%, now at a 0.04 ETH floor, up 13% over the week. And for the rest of the majors, including Bored Apes, including Azukis, they are basically flat both over the last 24 hours as well as over the last week in total. Moving on to the Web3 Roundup to get you some of the other pieces of news from around the space. We have the SEC delaying its ETF decisions for both the Dogecoin and XRP ETFs. And these delays have been expected as most ETF filings have final deadlines in October or even later than that. On the Trump side of things, Truth Social is apparently mulling to launch a token for subscription in its latest crypto push. Company is also still moving on with its venture into ETFs. And another piece of news, we touched on MetaMask launching their credit card, launching the metal credit card. A couple more information did arise around that, which I think it's pretty interesting because it does connect the credit card to obviously your MetaMask wallet, and the transactions are verified on a smart contract level, finalized in under 5 seconds on the Linear L2. The SEC, another piece of news, is ending the investigation into PayPal's PYUSD stablecoin. And basically, as an extension of the conversation that we had yesterday on the AI hype, I did look at some more general, at some broader data, just to see, because we talked about virtuals, we talked about AI agents being up significantly over the last 2 weeks. And the AI agent market cap has actually doubled in 3 weeks. That is according to Cookie.fun, is now back at $9 billion, was a touch above $4 billion just a couple weeks ago. So definitely a more sustained movement on the AI side and AI agent side of things. Brett, is there anything standing out to you from the Web3 Roundup?
Nothing particular. I've been trying to just like keep an eye, because like it feels like energy's starting to pick back up around here, but I don't know where. I hear like, the virtuals ecosystem starting to get a little bit of energy, the meme coin trenches, but that's not my thing. So I'm trying to see where I can spend my time. I want to actually go and revisit a few places that I've already been that I actually liked, like Pendle, because I have a lot of stable coins and shit from selling off in the Kaido days, or Kaido, Kaido airdrop. And I actually haven't deployed them. I've been either looking to send them into Hyperliquid or just like passively farm them somewhere, whether it's like, Aave or Aerodrome or, Morpho somewhere. And I just listened to a podcast on Pendle yesterday, and I want to revisit to see if like there's anything that's been developing there. They were just really impressed by the productivity of the actual application. Because like we're getting back into this like return of fundamentals, look at things that are actually doing well. I think the PE ratio was like 22, which is pretty decent relative to all the other applications in our space that have been doing okay. So nothing on the headlines, but that's where my head's been the last few days.
On the Pendle side of things, it is a super interesting protocol. I'm using it personally for my stablecoin deposits on Sonic via Aave to just earn some additional yield via Pendle. But for those unfamiliar with how Pendle works, can you quickly break down basically the idea behind Pendle as a DeFi protocol?
Yeah, I mean, its key innovation is that it separates the yield from an asset from like the actual underlying asset itself. So like you would come to it and say, hey, here's like what's an example that we used back in the day when we were farming for like the LRT days, right? And so you'd come and I could deposit like an LRT that I had, LRT being a liquid restaking token. The restaking token has claim to a bunch of yield at a bunch of protocols, whether it's points or literal yield from the underlying. I would deposit it and I would get two things, right? I would get the YT, which is the yield token, which is like a claim to literally just the yield that is associated to the thing that I deposited, or it'd be PT, which is the principal token. So like, it's just a way for you to, PT would be the principal token, which is just like, I'm basically selling the yield to other people who are trying to leverage up on what that yield has claim to. We used it back in the day as a way to say like, hey, we think the LRT space is going to give us a bunch of points to a bunch of stuff. And we think that the yield is actually mispriced, right? Like it's worth all these points. We think the points are actually going to be worth more than we think. So I'm just going to literally sell my underlying to a degree to get a lot more of the yield portion of this thing, just to get a bunch of points. Now that didn't ultimately work out very well for me. I think most of those sucked as a bet, but that was the thought. So I want to go back and check it out and see if maybe I can get in there and sell off the yield to get a more static return from other people who are trying to leverage up to a degree.
Yeah, I think the LRT example is perfect because back then, as you said, you basically had created this market for people who were more bullish on the points and wanted to speculate on the point side of things, and people who were like foregoing to farm points and they wanted to have a fixed yield in return for basically giving up the points and giving it to the point speculators. And I think in the LRT days, that got up to quite crazy multiples. You could easily get a 40x, 50, 60x multiplier on the points that you collected with your deposit. And I did partake in that too. I do think to a significantly lesser extent than you did. So also speculating on the point multiplier side of things, but ultimately did not work out in my favor back then. But I still think, independent from this LRT speculation that we did back then, that Pendle is one of the coolest DeFi protocols just because they have created this market to trade yield, which others haven't done to that extent, or not that I would be aware of.
Yeah, and the underlying token associated to it, like they do the VE model. So like they generate, I think it was something like $1 million a week ish in fees, and a lot of that goes back to the token holders through the VE model, through the gauge. If you stake that and vote with it and do whatever. So I've actually owned the Pendle token for a while, but I just had it in Infinex. It's just been sitting there on the side and not really been productive for me. So I think I need to reassess all my stuff and see if I want to maximize that.
Yeah, that's fair enough. Is this basically the main focus for your portfolio right now, to go to Pendle, think about what you want to do your stables? Or is there anything else that you have in mind?
Yeah, if I'm being honest, I haven't moved a lot in the last few months because my taxes from 2023 were not in yet because I was just dealing with a bunch of shit for it. I finally got that in this past week. So now I know, like, I didn't want to jeopardize stables. It's like, I don't know what my obligation is. I want to deal with it. I want to like get this thing squared away with. So now that I have my 2023 done, I'm going to rush and get my 2024 done. And then I'll actually know how much I can risk without having obligations somewhere else. So yeah, now that the off-chain stuff is handled, I want to do a holistic review of my positions, and I actually know how much I can allocate reasonably. and then do that. So yeah, it'll be a lot of that stuff. I don't think I'm going to go super deep into a lot of these ecosystems. I was talking about going into hype and like maybe going a little deeper, doing some leverage stuff inside of the ecosystem. I probably just get exposed to hype. I'll, try to find some advantageous stuff here in the Pendle ecosystem and try to play the safe and strong position. Just keep adding to it.
Yeah, I think that makes sense, and I'm quite curious to revisit this in a couple of weeks and hear what you've done on Pendle. Look, we got a ton of things to get into, but before we go into the main headlines, I want to get a bit more in a general discussion when it comes to Bitcoin as an asset class. We've spoken yesterday quite extensively about some of the reasons why BTC is holding up strongly, both in terms of its absolute price, but as well as the BTC dominance chart. And there's been this interesting statement by Robert Michnik, who's BlackRock's head of digital assets, and he said that Bitcoin is turning or could evolve into a permanent low beta play reflexively. It's quite a few finance terms to take in there. So basically, a low beta means just lower risk, lower volatility. You would say that bonds are very, very low beta. Permanently, obviously, meaning that the whole asset class is transitioning or could transition to this more low risk, low volatility state. And reflexively, in that case, means that perception is shaping reality. So if enough institutions, if enough traders believe this to be true, then this reality could become true. And this line of thought, or this like commentary, at least from BlackRock's side, has started after we've seen in the recent weeks a couple of days where you had the S&P 500, you had the stock market in general either being in a downturn or just being flat on the day, but BTC was still going up, was still climbing. And also another interesting comment when it comes to that was from Jan van Eck, who is the CEO of Van Eck, said that traders would be more inclined to hold BTC if this correlation between stocks and Bitcoin continues to weaken. And I think this is pretty interesting because we talked about this decoupling for quite a while on the show, whether it was from the perspective that we've seen this individual days where people were starting to celebrate the decoupling quite early, and then BTC continued to follow stocks and crash, but also in the two most recent weeks where actually BTC had significant gains above the stock market or contrary to the stock market. And I like this idea of basically shaping this into a new reality on the one hand. On the other hand, what we also clearly see is the data that we kept reporting on for the last couple of days when it comes to the inflows into the BTC ETFs. Yesterday was another very, very strong day with 172 mil coming in. The start of the week was very strong with 600 mil. Very interesting that a lot of outflows from other ETFs accumulated into BlackRock's IBIT ETF to $970 million of total inflows. So I do think that obviously this very, very strong ETF views help a lot to sustain the price action, to sustain the dominance, plus all the structural positive news that we have mentioned. But Brett, I'm quite curious to hear your thoughts on this like reflexivity thought of shaping this perception into reality by all of us like basically manifesting that BTC is lower volatility than it used to be. How do you feel about that?
Listen, man, I'm a recovering Bitcoin, we'll say skeptic. So I think it's important for people to realize, like, I'm super technical, and like, even though I understand like Bitcoin has all these value props, it's just always been a pain in my head to get over like the security budget stuff and just like let it go. I'm starting to get out of my own way and stop mid-curving all this stuff and just like observe reality and say like, yeah, okay, that is a concern, but it is a concern in such a far distance that, you just got to acknowledge what's going on in the world around me. So with that said, yeah, man, there's just a lot of, there's a lot of good catalysts going on for Bitcoin, right? Like it's, you're having all of these different vehicles getting spun up solely to be able to just like do the micro strategy, buy into this stuff, right? You're you're starting to see the game theory play out across the industry of, we want to be the first person to buy, and we want to buy and hold. And, I can't, I can't keep denying the drum that I keep hearing beat, which is just like, everyone fucking loves Bitcoin. They fucking love it. So I'm trying to get out of my own way. I can't give a sobering view of like, I'm not fully there yet. I still don't own like really any Bitcoin outside of like some degen shit that I did in like the ordinal space. Got some pups and whatever else. I should change that. Maybe that'll be part of my holistic view. And it's also like the secondary thing of this, like people should know that I'm not a great trader. So like, know that. Second thing is, I'm also a little bit of a contrarian, and I think I'm fighting that urge in my heart as well. Where it's just like, so many people love Bitcoin. My initial like gut reaction is like, fuck that. Like I'm gonna do the other thing, like whatever the other thing is. I don't know. So I'm trying to stay aware of what's going on, and just acknowledge reality and get over myself and get over my own emotions and see what's going on, because it is, as you said, I'm looking at the ETF flow, like right where the last, what was it? I see 170 million on the 28th, 600 million on the 27th, 400 million on the 24th. Like it's just nonstop. You have to acknowledge that it has a special place in the global markets, and yeah, it's starting to be the thing that we always thought it would be. So I guess what I'll say.
Yeah, I think that's a very, very fair take. I see also Funky reacting in a very excited way when you mentioned buying more Bitcoins with a lot of heart emojis. Funky, I'm going to go to you in a second.
I know he's going to love it.
Yeah, he's going to love it for sure. I think that also the net inflows into the Blackrock ETF, specifically the 900 mil that I mentioned before, was the second strongest day since inception for Blackrock's flows specifically. And as you said, like last week alone, more than 2.5 bill into the BTC ETF specifically. And I also like changed my...
Yeah, almost a bill. Well, I bet it was 970 million on the 27th. It's wild.
That's insane. I also changed my perception about that because I just, for I don't know for how many years I just had a BTC savings plan and was like quite happy with that, to have that up and running. But I never like felt the crave or the urge to buy more BTC beyond that. But that has changed for me significantly with this meme coin cycle, where I was then very happy to just rotate profits after trading memes, AI memes, everything quite a lot just into BTC. Maybe it was like also a bit of a, at first, like cynical sentiment to be returning to the origins of crypto and just seeing how so many other things have this extreme volatility and go to zero. And if something is not to go to zero, then it would be Bitcoin. But I now feel way, way better about that, to be honest, when I see all of these movements around the world when it comes to policy and lawmaking around BTC and this very, very strong institutional interest in the asset class as well. And last but not least, this trade war tension between US and China that also has a Bitcoin component to it is signaling a lot to me. Like if you have two of the most powerful countries in the world fighting for basically who has more BTC, who has more miners, who's controlling that, who's pushing for that, both in a completely different way when it comes to the comms around that. But that tells me that it is something that will become even more relevant over the next couple of years. Brett, do you want to come back to that? And then I'm going to go to Funky.
Yeah, I'm mostly still just focused on the all of the vehicles being spun up to just like DCA into Bitcoin in the same way that Sailor does. Now the difference is like all of these new entities, we talked about it. I guess it was last week, maybe it was Monday. I can't remember anymore. Like Tether and there's like Tether and a few other entities that like their sole purpose is just like, hey, you come give us $100 million, we'll buy $100 million or $100 million worth of Bitcoin, and they'll take a 10% cut on that, and then like that's how they make their money. Like at least MicroStrategy has an underlying business that like a basal level of productivity, and everything else is just like solely just to keep DCAing. It kind of smells like a Grayscale style shit where like the trade sounds good, feels good for now, but like if your entire business model is to take on debt and then to use that debt to buy Bitcoin, I wonder how long that'll work. But that's a problem for another man in the future. I think right now these things aren't even live yet, and you can ride that wave for a little.
Yeah, fair enough. Funky, very curious to hear your thoughts on our discussion so far.
Okay, so I'm just going to start off by saying the smile that was on my face as Brett was talking was almost as big as the smile from when we finally met yesterday. Like, absolutely, I love hearing what Brett said, but I want to offer some context, right? Brett, I know you said you think that everybody talks about Bitcoin knows about Bitcoin. And I had an experience the other day in an Uber that really demonstrated still how early we are. Bitcoin, out of anything in crypto, the logo is probably as well known. It's the only well
Iconic.
known,
Yep.
right? Like people, iconic. People see Apple, they know what that logo means. People see the Bitcoin B, they understand what that is. But I met a guy who's like, when I started explaining why I was here at Token 2049, and I said that, Bitcoin. And he's like, what is Bitcoin? So there are people in the world who still have no idea what Bitcoin is. It's a really small industry. There are so few Bitcoin. I would always encourage anyone who has the means to become a crypto gold coiner if possible. And then to your point, Brett, I'm like you. I don't trade a whole lot. I'm just someone who tries to DCA into things or get into alts early. And then I just hold and I wait and I peel profits, mainly to accumulate more sat. So, I mean, this put a huge smile on my face. I'm glad you're coming around to it, my friends, and I'll just leave it at that.
Yeah, I'm a recover. Like, I don't know how heavy I'll be able to go into it. I think I need to just buy some just to like get that initial, monkey off my chest to like, okay, I'm in. It's no longer a fight in my head, and go from there. But it's still just like my brain is so tuned to like the programmability, all the like the stuff that can be done with smart contract platforms that like I have to imagine the landscape is a value is much bigger there. But yeah, man, like the competition is also much more steep because a lot of these things that can cover all those desires are not really differentiated. So like all that money can go into a bunch of things.
I very much resonate with that, Brett. There was a time, I think it was in 2018, maybe 17, 19, bunch of years ago, where I was posting that I think back then, I was very, very happy about my ETH holdings because I even back then had them for a couple of years and was up significantly on that. And I said, yeah, ETH is going to flip Bitcoin. This is the smart contract future. And that was well before we had the extensive landscape that we have today. But that's definitely one of my worst takes that I've ever had on the timeline. The ETH flipping, this will not happen. I don't see this coming. But shall we maybe?
I was banking on it. No, I don't. I think the ambition should still be there, but I think I've given up on that.
Yeah, same. Shall we maybe stick with the Bitcoin topic and move the second headline first, Brett, if that's okay with you to take that, the Bitcoin community being split over this key proposal to add data or to ditch data storage limits?
Yeah, sure. So the headline is, Bitcoin community split over key proposal to add data. What it's doing is removing the op return limits. Op return is just something that's within Bitcoin Core. It'll allow people to store much more amounts of non-financial data directly on Bitcoin. And just for some relative sizes, current limit is roughly 83 byte chunks, 80 bytes for the data plus 3 bytes for the opcodes. The new limit would basically just be the limit of transactions, which is roughly 100 kilobytes. So, that's a factor of 10-ish, a little over 10. This was run by Peter Todd, who he said that people are actually basically bypassing these limits anyways with technical workarounds, and he's just trying to remove it from Bitcoin Core. Bitcoin Core being the single client or the most dominant client that is taking place on Bitcoin. It's actually very similar to what's being done with when ordinals came around, right? Like people were just stuffing a bunch of data on Bitcoin in areas that maybe weren't intended to just have this stuff stored, arbitrary data. And the purists of the Bitcoin world believe that it is an assault on Bitcoin. I even saw a comment from one of the main protagonists of the Bitcoin world saying people should go to jail because it's non-consensual use of other people's PCs. Because if I store data in that and then you are forced to download it on your node, like I'm basically just like, not storing stuff on your PC without you giving the permission to do it. So they're up in arms. People think it's going to ruin the actual value proposition of Bitcoin. The counterpoint is like, oh, now it's useful for more things. Other people, degen specifically, are going to store stuff on this because they value Bitcoin, and therefore it will drive fees to the network, and therefore it will make it more sustainable from a security budget standpoint. I'm of that belief. I think you need to have some of this stuff to allow for it. I don't think it's that big of a deal that's going to destroy Bitcoin if this goes through, because people are already getting around it today. But it's a fun discussion nonetheless. I was listening to a few spaces yesterday between like Bitcoin, XRP, and ETH and all this other shit they're kind of talking about. It's a lot of drama, but I think it's much ado about nothing.
So your take is that you are not opposed against this proposal?
Yeah. Mostly because like you said, people are getting around it anyways. It's like, yeah, sure. Is it gonna like keep it as pristine? But like, I don't think it materially changes the properties of Bitcoin enough that it's going to actually like damage the network. I mean, like the reason everyone is buying it right now is because of that 21 million hard cap and because of the logo that Funky pointed out, right? They don't give a shit about the ordinal stuff. They don't care. They don't understand. They don't do whatever. So like this is just all stuff that allows for them to bull post if it actually does generate fees, the same way ordinals did around the halvening, right? The halvening came, everyone was paying to get the sats that were associated up to and around the halvening, because that a bunch of fees were being driven to miners, and everyone's going, oh my God, look at all these fees. Bitcoin solved the security budget. It's doing all this stuff. So like you can't have your cake and eat it too, right? Like this stuff does actually add to the activity of the chain, drives fees, gets people like degens specifically involved to a greater degree. I don't think it's a bad thing. The main property that is its value prop, which is the 21 million hard cap, doesn't change.
Do you see any technical risk with that proposal, or nothing that you would deem relevant?
All it does is if you have more people being allowed to stuff more shit into the Bitcoin that like are onto the network, it just means that the bandwidth requirements could potentially go up because you have more data that the nodes need to pass back and forth between each other. But Bitcoin is such a super low throughput chain that like it's not even close. You could quadruple this, quintuple it. You could 10x it, and it still wouldn't even be close to a lot of the other chains that exist in the world. So like it's not at risk of like hitting any limits that would risk the network or drive it from being as decentralized as it is. It's not an issue, no.
Yeah, I thought this is a super helpful breakdown from you, Brett, because it is a relevant news. It was all over my feed yesterday, and I thought it's kind of important to get a level take on what it actually means. But with that being said, we have to move on to the next piece of news and basically go back once again this show to Blackrock. Like this show is very, very much focused on A, Bitcoin, and B, Blackrock. So going into this second headline, BlackRock is looking to tokenize shares of its $150 billion treasury trust fund. This is what a current SEC filing is showing. And I think this news is interesting because of the structure behind it. So it's actually the thing behind it is that BlackRock is introducing a digital share class for this treasury trust fund. It uses blockchain through BNI Mellon, and these shares will be used to mirror the ownership records. And the idea here is not to raise money. The idea here is not to bring more crypto exposure or have more on-chain holdings. The sole concept of that is basically exactly that real-world asset tokenization. It's exactly to use blockchain as a proof of ownership. And these so-called DLT shares, distributed ledger technology shares, won't hold crypto, is what BNI Mellon is saying on that, who is the fund's exclusive distributor. And it is a very, very important step for the broader adoption. That's the point that they are making of tokenized cash, of digital assets, and blockchain-based settlement infrastructure, which means banking settlement infrastructure, settling banking transfers via blockchain. And that very, very strongly connects to the still ongoing RWA trend. If you look at platforms right now where the user numbers are still growing, where transactions are going up, Courtyard is definitely one of them, where you are tokenizing collectibles, Pokemon cards, bringing them on chain. Even our last piece of news, which we'll get into in a couple of minutes, around that $500 million Telegram fund to tokenize corporate debt, is in this RWA category. So I find it quite interesting that BlackRock is doubling down on that. Obviously, we have the Biddle fund, which now has, I think, close to $2 billion in assets, in which we've talked about on the show so much. But that they also make a very prominent, a very deliberate move where it is quote unquote just about ownership record. It's not about packaging crypto into new shares, but leveraging basically the core principle of distributed ledger technology. So this is why I thought this is actually a pretty interesting and relevant piece of news. Brett, any thoughts on that?
Nothing strong. No.
Alrighty, then let's smoothly move into the last piece of news. Then let me get that up on screen because this is one that I like very, very much. It is to do with Telegram launching a $500 million on-chain fund on Ton, and that is together with LIBOR, and it gives institutions access to $2.4 billion in debt. So how does this thing work exactly? It is the Telegram Foundation that is deploying this RWA fund, and it takes $2.4 billion in corporate debt and brings that onto the blockchain. They call it the Telegram Bond Fund, and it allows institutional and accredited investors to gain exposure to Telegram's outstanding bonds directly through the Ton blockchain. That is coming from an article in Decrypt. The fund will also participate in future Telegram bond offerings, serve as a collateral for borrowing, and yield generating strategies within the Ton ecosystem. And that is the Ton Foundation, also think that the RWA sector in total will exceed $50 billion this year. Just to put that into perspective, for example, with the total AI market cap, it includes agents and infrastructure, which is at not infrastructure, which includes agents and other AI protocols, is at $23 billion right now. The way investors will be able to manage these assets is directly through Telegram native wallets. And it is basically not open to everyone. Just to reiterate that once more, it's only for accredited as well as institutional investors. I think, Brett, go for it.
So this is like, how much did you say this was? 500 million? 800
Yep.
million?
500 mil for 2.4 billion in debt.
If you had to guess how much TVL is on Ton today, the blockchain, what would you say?
That's a good question.
You remember it had a wave, right? We were all going into it like,
we had the clicker games on Telegram going on.
Yeah, it had the distribution. Pavel got arrested. It peaked at 800 million in just after July. What is it?
I would have said 4 bill, so way above that.
Yeah, so it peaked at 800. Today, it's 140 million. So this fund alone is like 3x the actual TVL that is on the entire chain right now. It's basically been bleeding out since that time in August of last year. Along with the token, it looks like the token market cap got all up to 25 bill just after April, and is now down to 8 bill ish. So some of that is just a byproduct of the token itself going down, but still the token has been we'll say cut in a third since then, but the TVL has been gone from 800 to just over 140 mil. So it's starkly down from all-time highs. So it's just crazy to me that like the RWA fund is 3 times the size of the entire chain right now, the actual activity, and 2 RWAs in Ton. Like that seems weird to me given its advantage, right? Like Ton's advantage is the distribution of its Telegram application, right? And like I would say the users that are utilized there are not RWA users. They don't give a shit, right? So like I feel like all of this time and energy and money could probably be better spent to try to activate those people and actually utilize their existing user base instead of doing a boring RWA thing. I don't know, but maybe it's a safe way to just build TVL on the chain, and that's their intention.
I think that's a fantastic point. Just to add a bit more context to that, as of March 2025, Telegram has 1 billion active users. That is monthly active users, and around 450 million daily active users. And as you said, you have the mini apps on Telegram. You have games that you can play within the app. You have collectibles, both that you can basically use for yourself or gift to others, which work as NFTs in the background. So there is already quite a few ways to spend more time on Telegram than you would if you were only to use the app to chat. There's also obviously in-app monetization with these collectibles, with the Telegram premium subscription. But as you just said, there is probably, apart from that, nothing that is really building significant TVL there. There's no yield farming to a large extent. There's no massive stablecoin usage. So what do you think? What is going on here? Is this, as you said, an easy way to just build TVL and kind of align that more, in a sense, with the token price, because the token is still at an 8 billion market cap, 16 billion FTV, and to not have this massive gap between FTV and TVL? Or do you think that's like more of a strategic pivot to be like, maybe we can't monetize too well with the users, so we need to come up with something else?
I don't know. I think it's just an attempt to do all things. So it's just, oh, RWAs, stable coins is the future. We should try to get into that in some capacity. Looking at like the breakdown of the TVL right now, the largest protocol is Ton Stakers, which is just like liquid staking / farm, as categorized by DeFi Llama. So like the bulk of the TVL is just sitting there. And then the next one is an RWA platform, Cygnus Finance. And after that, it's a DEX and liquid staking derivatives, the normal DeFi shit. Yeah. So like for me, it's just like probably just a play to try to get into stable coins, if I had to guess.
Fair enough. How do you think about that at Mega ETH? Because you obviously have the trends that change all the time, or that have more mindshare cycle. Do you try to capture? Will you try to capture them, or do you think that it's more important to work on the foundation, on the community side of things, which you've definitely been doing very strongly with a series of events and hubs around various cities? Where do you lean with this?
Yeah, we have an eye on the RWA stuff, but for us, it's all about trying to get like actual new, novel, different applications. So it's, the doing the stuff to the Mafia app. So, noise, euphoria, GTE, whatever, just trying to like actually elevate the things that people have demonstrated that they want to interact with as users in the chain, and then just make those things meaningfully different and deliver like net new experiences. So our priority is still first and foremost new applications to the space. Or at least like starkly leveled up applications for the space based on what we can actually deliver. Not so much the like trying to get the rest of the stuff going. Although we do have an eye on that, and we are doing some things to facilitate that growth as well, because you can't ignore like stablecoin growth in this industry, especially as like we have to try to build a sustainable ecosystem, right? So we want to be the hub for as much as we can. We want to draw liquidity from as many places as we can, so that the DeFi stuff can be leveled up. To enable those user experiences.
Yeah, I think that's a very, very good perspective to have. And what I also want to ask you, basically the same question, but from a different perspective. So this is you from the Mega ETH perspective. How do you feel about trends as a content creator? Do you still, because I had this interesting conversation at an event today with DWF Labs, the market maker and fund. And they've been talking exactly about content creators and what it takes for a content creator to stick around for multiple cycles, or even for participants in the industry. Is it more finding a niche to be in and to dominate that, and to just quote unquote like hope that this exists, or like be early enough to pivot, or to try to become sort of a generalist who is maybe specializing in a certain type of knowledge? Like you are obviously fantastic when it comes to all the technical things.
Yeah, I think I did a post on this yesterday. I think to grow, you need to have a niche. Like you need to dominate a vertical to gain authority within a sector. And then once you get like critical mass of followers that kind of trust your opinion on one subject, you're pretty easily able to facilitate conversation and expand that domain and your curiosity to different stuff, right? Like as I was growing, I did the example of like I did a post on NFTs, right? Like even though I consider myself a smart person, I observed some stuff in the NFT world that was good, cool, whatever. I did a comparative chart of these things. I posted it. It did okay. It got like 10,000 impressions, whatever. I think it was good for my size. But then Whale had seen it, and Whales liked it. And the very next day, he did the exact same thing. Like he basically took the same graphic, the same comparative, and posted it. And because Whale over time had curated an NFT specific audience, and he had grown and earned authority within that space because he posted basically the same content, his audience was just much more receptive to it. Generated like 80,000 impressions. It's had a bunch of engagements, likes, whatever. And it just goes to show that like, I hadn't done the work to that point of building up an NFT focused audience because I was a generalist. I was just like posting about blast yield farming and then fantasy top and then NFTs and then meme coins. And then I would do some nerd debate shit and I was just all over the place. So I think if you're like actually going to try to like long-term be a content creator or whatever, you just have to double down on something that actually is enjoyable to you. For me, it was the nerd stuff, but the nerd stuff didn't get much engagement. So I was afraid to post about it. I just kind of bull posted through that and just like kept talking, kept engaging with people that had those conversations on their own timeline that had already grown their accounts. And through that, I had gotten follows from those people. I had earned some respect from those people because they knew my perspective was thought through, warranted, whatever. I had gained some authority in it. So that whenever I did start posting about the technical stuff that did appeal to me, they would engage, they would amplify, they would have the conversation, it would grow my account that way. They would give me exposure to people because they were having those conversations and their follower base would then know that I'm someone that also wants to have that conversation. And then now that my account is the size it is, I'm just over like, 42,000, something like that followers. Now I can post basically anything and start some level of conversation. And I can post like random shit about bread. Like I'll just do some of that every now and then, and people want to do a bunch of bread puns, or like I'll throw out some shit on NFTs or whatever. I can usually get like a basal level of engagement just from people that are curious about it, and they respect me for my technical opinions, and will extrapolate that out to other stuff. So yeah, I think the strategy changes as you grow, but to start off when you're small, you need to like really try to cut your way up in a specific domain, and then expand.
Yeah, one follow-up question for you, and then I want to go to Funky, who also has his hand up. You said you were in the beginning afraid to post more about the nerdy stuff, the technical stuff. What changed? What made you do it in the end?
I just made the decision to do it. It's like it was the thing that I enjoyed, but I wasn't getting a lot of attention or engagement through it. It's like, I wanted to talk about scaling and L2s and in architecture and the upcoming EIP, but like none of my followers, which were all mostly people I got from like spaces and NFT groups and whatever, like they didn't give a shit about it. So like I would post that stuff and I would get no engagement whatsoever. And it was kind of defeating. I didn't like it. Didn't feel good. I assumed I was dumb, whatever, all that stuff. But I enjoyed it. Like that's what I wanted to talk about. So I was just like, no, fuck that. I'm gonna keep talking about this stuff because it's what I want to talk about. But I put a lot more priority into like trying to change my social graph because I realized my social graph was not conducive for the conversation that I wanted to have. So I made a very deliberate attempt to follow and engage with people that were having the conversation that I wanted to have about the technical shit. After doing that for long enough, most of them would follow me because, I would be in their replies pretty consistently, giving thoughtful replies, having a conversation, giving good critiques, like all that shit. So then whenever I did post that stuff in the future, those people that were following me because I was having that conversation in their comments would then retweet me or comment on my stuff or do whatever. And then that allows for my growth to happen because now all of their followers would see my conversation and it would start to slowly pull me into their stuff. The Kaido board is a good view of this, right? If you go to like the CT board, like I'm pulled mostly to the center of that now because like I was engaging with like the core technical CT group. So like I have a lot of mutual follows with people that I would classify as just like the dominant CT core engagement core. And because of that, like it allows my stuff to get amplified pretty easily.
How long did it take you to build this authority? Roughly,
I don't know, probably about a year or two. I started posting, like I'll have to go back and look at my Twitter stats. I probably started posting pretty seriously in November of 23-ish. That's whenever I like decided to do crypto full time. My contract ended with my last job, and I was like, all right, I'm gonna try this thing out. I'm gonna not start a new contract, do this full time, see how it feels. And that I waffled for a few months doing just like the blast farming stuff, trying to be all that shit, just at creating content, not knowing what I wanted. And then I, over time, just kind of fine tune my craft.
Yeah, fair enough. I have a couple thoughts on that as well, but Funky, I want to go to you first.
No, I just wanted to say, Fred, thank you. That post for me was very inspirational. It was very instructive. I felt like it resonated with me deeply because I've seen something very similar this month where I one of my duties basically fell off, and I didn't have to continue to do something in OpenGov for Polkadot. So I started using that time to just create content. And because I have so many connections in the Polkadot ecosystem, and because I know it so well, I've been here for 5 years, that content has actually just gone crazy. And I've actually went all the way to number 3 on the Polkadot Yapper leaderboard. And what I really want to do though is take my head of protocol partnerships and what I'm learning about running bare metal infrastructure and how that's a very unique approach to owning the whole tech stack, and do something very similar. So like as I continue to grow the account and leaning into the things that I really know, like on Polkadot's getting a lot of love and notice because of the Kaido strategy for the post GE. You guys in the modern market doing sort of the Polkadot explorations, which I love. And so I love that post. It really just gave me something to aspire to, and I wanted to thank you. And I would say it was great advice. So for anybody who's listening, and if you are a content creator, you obviously just heard Brett explain it, go check out that post. And honestly, as a fellow nerd, it was that specifically that attracted me to you. It's because I just realized like this dude is wicked smart. Like I want to learn from him. And you did all the cube drawings too. Like I think one of the things that I want to give you props for is not only taking really complex, as a former teacher, you are an excellent educator. You know how to take really complex topics and distill them down into the ELI 5. Cute little drawings of, now bunnies. At first it was bread. All these little things that you've done, these little flourishes, I think really make your content banging. And this is why you've grown into the voice that you have. And kudos, my friend. It's amazing stuff.
Yeah, appreciate it. Glad you liked it.
I think it's been I very much agree with what you said, Funky. I think it's also been a similar story for both the modern market. Started with a bunch of people and just gotta stick with it and just gotta be also consistent with it and not give up with it. And I was in a similar position as you were, Brad, with my stuff on the content side, because I feel like I've been around for quite a while on X. The first few years just lurking after I got into crypto almost 10 years ago. And then when I started to trade more, I wanted to write about the trading, but I didn't want to talk numbers. That kind of does not make sense. Then I wanted to find the more like finance, strategic consulting angle, which is more of my professional background either way. But then I was like, nah, I left TradFi and now I'm in DeFi, so I can't talk about like TradFi mindset or TradFi thoughts again. But at one point I was like, the only thing I will enjoy doing consistently is when I speak what my mind is pondering about, and I just have to own it. And because it was like so fragmented around the different things that I spoke about, from gaming, trading, DeFi, it was hard to get traction. It was like hard to become this generalist, and like basically I made my life harder by not having a strong niche to build from. And as you said, then transition into being able to talk about everything. But I feel like because I've been doing this for long enough, I still managed to build this critical mass. It took me way longer than it took you, for example, to get to basically even that same number or roughly same number of followers or whatever. Not that I think follower number is the most relevant thing out there, but it was a way longer journey. But the point of me rambling is saying that it also works if you don't take the optimal path. You just need to invest enough time into that and find your way to create content. And at one point it will just work out, and it's never too late. I still think that we are in the infancy of this industry. We talk about the stable coin market cap increasing and being in the hundreds of billions, but ultimately, if you compare that to the size of the stock market, of the treasury market, that is still so small. So I do think that there's a long way to go. Brett, any final reflections on that before we close out the show for the day?
Yeah, I would say that even my stuff wasn't the optimal path. Like it's all exploratory for everyone, because like to make it sustainable, you have to, in my opinion, do the thing that you actually enjoy doing, and just like have the confidence to do that thing. And yeah, the the relative numbers are wild, right? Like we sit here and talk about how big our accounts are. Between like I'm 40 something thousand, you're 40 something thousand. Like I would consider us bigger accounts in this space today. You get a couple that are in the hundreds of thousands, and then the wild ones that are a couple hundreds of thousands. If they're active followers, then it's crazy. That's where you get like the Anthems of the world, right? But that even all that stuff relative to the rest of even Twitter itself is just like not big at all, right?
Yes.
Like you have like even my dabbling in like the AI Twitter space. AI has some absolute runners, like the people that are 20, 30,000 follower accounts that are consistently getting millions of impressions. Now we talk about how organic those are, but like, yeah, man, it's just we're in a bubble, small little niche little bubble. And I would say just yeah, confident posting in what you enjoy is one way to do it. There is no right way.
If you look into the mainstream, I don't know, look into the fashion industry, Instagram and TikTok, if you're under 1 million followers, you're basically considered a micro influencer. If you have 1 million somewhat active followers on X, in crypto specifically, you'd be just by far the largest person that everyone would look up to what they say. Anyhow, that brings us to a close. It's been a great show. Brett, thank you for jumping on with me. Thank you for making it extra exciting by just appearing on stage when I finished the intro. Thank you, Funky, for your contributions. Thank you for everyone who's been with us in the audience today. We see you, we appreciate you, and we're going to do it all again with you tomorrow, same time, same place, 7 a.m. Eastern Time, live on X, live on YouTube, and also posted on Spotify as well as Apple Podcasts. Have a great day and see you tomorrow.